Good morning. It's Tuesday, January 10th, 2023. It's about 7:45 a.m. Pacific Standard Time. So let's see. Let's get into a daily chart here. So yesterday we talked about how this market, if there's a spike, I like spikes. That's how I get into the market. And that's when I would get in. So I wasn't sure if if this was actually an official spike or we were going to keep going up and it was going to kind of sit here for a while and then maybe spike and then come down. So as you can see here that the market on a daily chart, it actually spiked and the second bar came down here. So yesterday, and I had mentioned this before, the only two charts I really look at as far as trading would be a daily chart and a 4-hour chart. So here's the second bar, and that's pretty much confirmation that that is a spike. And I got into the market right about here last night, I don't know, maybe an hour before the market closed, and it just went straight down. So I started gaining profit pretty fast. Then overnight trading, it did all this, and this morning it came up, did another little spike here, and it came down, and it's right here. So the market currently is down about 8 points, not very much. But so I'm in the safe zone, meaning that if this market came back up here and it started to kind of channel a little bit in here before it went down, then I might get out and wait for another spike. But if I'm going to take a loss, it's going to be very minimal, as opposed to getting in, let's say here, and then the market goes up here, and then I have to get out and I take this big loss right here. So I got in pretty close to the top. You'll hear a lot of commentaries on YouTube where people say you can't find a top and you can't find a bottom. Well, you clearly can, because I do that most of the time. And I would think that those people trading just don't have the experience. But you can find tops and you can find bottoms and you can time the market, because that's how I trade. I've been doing this for years. So this is where we're at now. Back to the daily chart. And we'll see where the market ends up for this rest of this week. This is the beginning of the week, so this is a good time for this market to continue down. Now, if it continues, it starts to go up, then this whole week is pretty much wasted as far as going down, and it's going to be sitting around just wasting time, because eventually these markets are all going to go down. I mean, you can't escape that. I hear the news and they're saying, oh, we're back in a bull market, or there's certain sectors that are going to start going up again, and it just, they're just trying to get you back in the market. That's all. Clearly in the bear market, this market's got a long ways to go. How far down is it going to go? At least to this line, and that's pretty far down. I'm sure it's going to go down further than that, but at least to that line. So look at how much of a drop we got. Another thing is, let's get, this is a volatility index. Okay, so this has been pretty accurate as far as, I wouldn't trade with it only because there's such a time lag, but there are consistencies, and one of them is that if you look back in history, when this VIX volatility index reaches anywhere from 50 to 80, then we're pretty close to a bottom. So right now, where is it at? 21. So we're far from bottom. Okay, so right here it hit 85, and that was back during the pandemic when the market just tanked. It just went straight down. And so that clearly shows the market was close to the bottom and it had to come back up, and that's exactly what it did. And as the market came up, it started going down. So here's another one in 2018. Market had hit another bottom, and this thing went way up to 49. And so you get the picture. 2015 had another one. 2012 and 2008. Of course, we had the crash, and that went all the way up to 90. All the way up to 90 and came down. So you can see the consistency in this. And it came down, and, of course, down here, market looks like it's pretty consistent. And then it goes up here, and the market crashed, comes back down, and is pretty consistent at this point. And so consistency is somewhere around in the 20 range, and that's when the market's low. So where are we now? That's where we're at. We're in the 20s. So this market has a long ways to go before it hits bottom. A long ways to go. So I don't care what you hear on the news, we're not even close to bottom. Not even close. When it gets down to this point, then I would say we're close to bottom. But anything short of that, I would not bet on it. So the reason why I'm mentioning this is, let's see, zero in. Let's say I got in here and I bought options that are 2 months until expiration. That means they're good for about 2 months until they expire. Well, I would think within 2 months, this market's definitely going to be down in this area. So you can actually hold. And, if worse came to worse, if I had call options, it'd be a different story, because this market's only got very limited upside. Downside, pretty much no limit to how far it can go. But if you have options that are pretty far out, meaning that they're not going to expire for several months, then you can actually buy and just sit on them, And even if it bounces around here, it's eventually going to go down. There's no doubt this market's going to go down because it's just part of the cycles of nature. Whatever goes up must come down. And if this market went up, let's say that it is manipulated, of course, but if they drove it up here, they're going against the cycles, they're going against nature. And that means eventually, when this thing does turn around, it's going to crash. It's going to be even more extreme. And that's why I believe the Feds they want this thing to crash. They're raising interest rates. They're going to keep raising those interest rates until this market hits bottom. And people are believing that, they're going to slow down interest rate raising, or they're going to maybe even lower it. They can't do that because people aren't paying attention, and they're just going to keep wanting to drive this market up until it's so exhausted that it's going to crash big time, and that's going to wipe everything out. And they don't want that to happen. They want it to go down in increments, and that's why they're raising interest rates. That's one way they can control it, so that people will stop buying. And so that's what's happening. So anyway, market's going to go down. We can make a lot of money going down because the markets go down 10 times faster than they go up. So you can make lots of money and really fast. And I think all this is all going to play out this year. It's coming up close. Okay, so here's a chart. This is back in 2008, and the market, went down. It hit its top. Then it's got another one here. So you got 1, 2, 3, and then it came down. And if you look at this one, it's got 1, 2, 3, 4, and then we're right there. So so we're right about here. Actually, you can say it's 1, 2, 3, 4, counting that, which would be this right here. And then the market eventually just started to just take off going down, and was the big rush down here, big drop, and then it hit bottom, and that's when this market went down 50%. From here to here was 50%. So that means that this area right here, that's where we're at right here. This area is this area here. And eventually, soon, it's going to start dropping. Now, I'm not saying it's going to be exactly like 2008. But it's actually paralleling 2008. It doesn't parallel the 2000 crash or any of the other crashes either. It pretty much parallels this one. And it's interesting because this is almost like it's playing out almost exactly like this. And soon, and as far as the timeline goes, it looks like it's pretty accurate as far as, it's ready to drop right now. And that's what this did. It just dropped and it kept going down. Hit bottom. Like I said, from here to here is 50%. This one here will probably go down the same as 1929, about 90%, which takes it way down, the Dow probably down to around 3,000, 4,000 points. So this is all very healthy and natural. This is all cyclical. We're supposed to have downturns. And after it hit bottom, it started going up pretty fast. And that's what happens. Market hits bottom. It doesn't want to sit there forever. It did do that in the 80s. Sat there for a long time and then went up. But, this one just started taking off pretty fast. So where are we now? Market's going to start coming down here pretty soon. And like I said, there's going to be a lot of people losing money here because they're not paying attention. They're not paying attention. They don't understand how these markets work. This is you buy here and you sell there. You buy low, you sell high. You buy low, you sell high. Now, because we buy options, you can play this market up and down. So the market comes down here, you buy put options, comes down, you buy call options, goes up, you buy put options, goes down, you buy call options, go up. So it's not that easy, of course, because you have to time this market just right, and you have to know where the bottoms are. And that's what I do. And I'm pretty good at it, too. So we're back here now. And that's where the market's going. Like I said, if you were to buy a bunch of put options here, you really can't go wrong. I shouldn't really tell you what to do, but the thing is, these markets have to go down. They cannot go up. And if they go up, it's making it more dangerous than it already is. And eventually, when it crashes, it's going to crash so big, it's just going to wipe everybody out. And the Feds don't want that. And that's why they're raising interest rates. Okay, so that's it. Right now, as far as a 4-hour chart. So, like I said, I bought in here. The market's here now. It's kind of farting around. And let's see what it does. See if it goes back up in here. Or if it continues down. If it goes back up in here, I'll probably get out and I'll wait for another spike. And then I'll get in. If it continues down and hits here by the end of the week, I'm going to get out, collect my profits, and we'll see about maybe going back up with call options, trading the market up. I won't know until it gets down here because I go strictly off of feeling. And that's what I did yesterday. When I got in, I just got a clear sign. It was very clear to get in. And that's what I did. And it was right. Got in. So, I could even take profits now. But I'm going to just hold on because there's only a second day. And let's see where this goes today. And if it comes down here, finishes off here today, then it might continue for the rest of the week because it's a matter of physics. You got momentum going down, and it's going to keep going until it hits a certain point, and markets always retrace. This market came here, went to here, and it retraced back up here. This one came here, went down, and it retraced up. They always retrace. Even when they're going up, this goes up, down, up, down, up, down. This one goes down, up, down, up, down, up. And this one went up, and now it's time for it to go down. So that's how they work. Pretty simple. Okay, so I'm going to check back with you guys tomorrow, and let's see where this market goes. And I'm wanting it for the rest of the week to continue down so I can get out in here. But we'll see what happens. And then I'll buy some. If it breaks down into here, I'm going to buy even more positions going down. So, okay, stay tuned. I'll talk to you guys tomorrow.